Hey everyone, happy Thursday, June 12th. It's about 9:45 in the morning on the West Coast, and it's time for another market update. Well, going into this week, it was a scary week for rates. There were some reports coming out we weren't too confident about, but it actually ended up being a pretty good week for mortgage rates. So, starting off, tariffs are still in the news. Tariffs still a big deal. It sounds like, at least on paper, China and the U.S. have some sort of deal in place. And then today there was some news that President Trump making some comments about instituting, some unilateral tariffs for countries that aren't negotiating with us. So overall, these things look like they have been more effect on the stock market than they've had on mortgage rates. But good to see some sort of movement on these deals because again, tariffs tend to be inflationary. We don't want inflation. We want inflation down. We want job market to show some weakness. So ultimately, for us in mortgage rates, we want the Fed to cut their rates. So good to see some sort of deal on the horizon. Hopefully, markets, I think, are kind of waiting for that to finalize before they fully react. But overall, good news there. Going back to last Friday, this is the piece of data we got this week or this over this last week that wasn't good for us. This was a big one. We know this BLS jobs report has had a big effect. The Fed pays very close attention to it because again, the stronger the job market looks, the more the Fed can say, hey, we don't need to cut rates. We're good. And once again, we got some data from this report that was negative for mortgage rates that we just can't trust. So let's take a closer look. So we know, like we talked about before, the BLS jobs report has two different parts. They have the business establishment survey, where they basically take some data from companies from their payroll, use some math formulas they got, and come up with what they say how many jobs were created. And so, jobs seasonally adjusted jobs created was 139,000 jobs created according to the BLS, where the estimate was 125,000. So that's not what we want. That shows job strength. We don't want the job market to look strong because then the Fed will basically say, hey, we're good. We don't have to cut rates. However, if you look at these numbers, 199,000 jobs were created according to the birth death model that they use. So the birth death model, again, is math. They basically try to calculate how many jobs were created by new businesses opening their doors and how many jobs were lost by the business dying, by the death of the business and closing their doors. And they had it at 199,000 net jobs created, where the ADP that actually uses full payroll data that they have had it at negative 13,000 for small business jobs created. So big difference there. And this number obviously is all of this number plus some. So it's hard to trust these numbers because, as we've talked about, basically they come up with these numbers. This first column is the first number that's been released, and then for 2 months after that, they go back and make revisions. And so, as you can see, every month so far this year, they've made negative revisions to. January started at 143, is down to 111. February 151 down to 102. March was at 228, and right now it's down to 120,000. Big difference. That was a huge number. Really hurt mortgage rates. If we got that initial 120 number, big difference there. April's already been down. They still got one more month of revisions to go. It went from 177 to 147, and now this May number 139. Chances are this May number will come down probably closer to under 100 or under. And if we would have got 100, let's say, compared to 125 estimates, that'd have been a good day for mortgage rates. That'd have been great. But unfortunately, we got this number right here, this first column, and consistently it's been wrong. And once they, do their, they check it, they end up a lot lower. But the markets react to this first number and don't really react too much as we get these negative revisions. So that's very frustrating, very annoying. The KCW, who goes through and audits all this stuff the next year, they basically are saying Q4 for 2024, the BLS overstated for those, so 3 months worth, 553,000 non-seasonally adjusted jobs. That's over 500,000 jobs that they were wrong about, that they said were created and weren't created. So again, I'm not a conspiracy theorist about stuff, but I am a conspiracy theorist when it comes to BLS jobs report. I think these numbers are garbage. They're not trustworthy, but unfortunately, the markets, this is what they react to. Second part of this report we get is the household survey. So this is where they actually call people, talk to them on the phone. What's going on? You're looking for a job, that kind of stuff. So this had it at negative 696,000 jobs lost compared to 139,000 jobs created with the first part. So big difference there. You would think without all that job loss, unemployment would have gone up, right? But it stayed at 4.2%. And the reason for that is that they show the total labor force in the country dropped by 625,000 jobs. So keep in mind, though, with that labor force number, if you haven't applied for a job, I think in the last 4 weeks, they remove you from the numbers. So if you didn't find a job that fit your skills, it just wouldn't work for you. You couldn't find a job to apply for. You disappear from these numbers, and so that kept the unemployment number only at 4.2. If unemployment would have gone up, markets would have reacted a lot differently. But it kept at that 4.2% number. And then the other part about this full time jobs, we lost 623,000. So any job creation was all second jobs and part time jobs and things like that. And we need full time jobs in this country to make ends meet. It's a very expensive time to live. So this is not does not paint a rosy picture for the job market. Which again, we don't want to see people lose their jobs, but anything that makes the Fed realize that they're causing harm and we need to stimulate the economy by cutting rates, that is what we ultimately want. So, not good. This wasn't a good report for us, but you would hope that the Fed's looking at these underlying numbers and knowing that they're not trustworthy. So the next things we got CPI inflation data yesterday. Going into it, we were not hopeful. Let's just say in the industry, there was a lot of expectations maybe coming higher than expected, but it actually came in lower than expected. So that was helpful for us. This is where things got good for us. So the headline number stayed at 2.4 month over month. It was at 0.1%. It was expected to come at 0.2. Same thing. Core stayed at 2.8%. The core only came in at 0.1% month over month. So this was a good report for us. Expectations were, the tariffs would start to take effect. It didn't see any sort of tariff effect. So that either means they're not having as big effect as people expected, or the companies haven't started passing that on to us as consumers. That doesn't seem likely because corporations seem to want to get every dollar they can out of us. So maybe they either haven't hit us or they're not having as big of effect as expected. So either way, good to see these numbers, because if we got a bad inflation data, followed after that jobs report, the narrative, things would have gone the opposite direction. And another part about this, the annualized core run rate for the last 3 months, we're only at 1.7%. That's below the 2% target. That's showing that at least leading into these tariffs, inflation was very tame. So again, there's still that tariff, shoe waiting to drop that people are worried about. But at least in the short term, inflation is on its way down. Good for us, because again, we want inflation down. We want job market weakness. So that way, the Fed cuts their rates. Second thing we got as far as inflation today, we got producer inflation. So this is the inflation, the cost to create these goods that we all buy. And just like CPI, people were worried about this one because biggest tariffs, and it came in very similar. 0.1 on the headline versus 0.2 estimate. On the core, 0.1 only a month over month versus zero point 0.3. That leaves us at 2.6, up a little bit because of what we replaced last year. 2.6 headline year over year, core at 3%, but overall all good numbers. These were well received so far. Again, people still waiting, maybe the tariffs haven't hit those yet, but overall both these CPI and PPI numbers came in much better than expected, which was very helpful, especially after this BLS jobs report. Next thing, initial jobless claims. We're at 248,000 new claims. This number is climbing. It was 210, 220. The last few weeks we've been in these 240 numbers. Estimate was 242. Again, don't want to see people lose their jobs, but again, the more job loss we see, the more likely chance that the Fed will cut rates. If they keep seeing good job numbers, they can just continue on as is because they say, hey, we haven't broke anything, so why do I got to fix it? So where does that leave us? So last week we were at 6.87. Today, it hasn't updated yet, but probably about the same. We jumped quite a bit with this BLS jobs report, but the last couple of days we've got that back. So we're basically back where we were last Thursday, which was good because this was not a good BLS jobs report for us. So again, want to see that coming down. If these BLS job numbers were a little bit more trustworthy, we probably would be a lot lower. But good to see we defended that 7 number. We didn't get above that 7. Important dates. So next week is the Fed's meeting. Fed's meeting on the 18th, which I believe is Wednesday. Right now, 3% chance they cut rates, 97% 7% chance they do nothing. So they're not going to do anything. We're not going to see a big cut rate out of nowhere, even though the president is definitely pushing for that. And I agree with him on that stance. But like we talked about, there's a press conference afterwards. There's a statement they release, and that's what the market's going to be looking at. Maybe this data is enough to so we see some changes in how they portray what they're doing. So maybe that increases the chance at their next meeting that they're going to cut rates. So that's what the market. They already know they're not cutting rates now. We're more going to be focused on what they're going to do the meeting after that. So if we get good info there, that's maybe where the markets will rally. So that's what we got to keep our fingers crossed for. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, happy Father's Day to all the dads out there, and I hope you guys have a great weekend. Thanks, guys.